This is a brief demonstration of a continuous audit facility. A continuous audit facility is an application that resides in the servers or workstations housing a business entity's ERP system. The application is independent of the ERP system being audited, and it is controlled by the auditor. However, the continuous audit facility is tightly integrated with the ERP system because it examines transactions processed through the system for compliance with predetermined, agreed upon business policies and best business practices. The evaluative algorithms in the continuous audit facility are triggered by transaction level events in the ERP system. For example, the posting of a vendor's invoice into the accounts payable module within the ERP system could trigger the continuous audit facility into action. While the continuous audit facility runs behind the scenes and is invisible to the users of the ERP system, it emails audit reports of all transactional exceptions to recipients authorized by the auditor. These audit reports include summary level trial balances in an XBRL GL format as email attachments. The ERP system used in this demonstration is Dynamics GP version 10.0. The continuous audit facility used in this demonstration is a small application written in Dexterity that calls a COM application written in C#. This particular continuous audit facility is designed to be controlled by an auditor evaluating selective transactions in accordance with an agreed upon procedures engagement. Continuous audit facilities could be incorporated into financial audit engagements as well as review and compilation engagements. As a side note, the continuous audit facility for QuickBooks Enterprises is also written in C# but does not require the Dexterity application. Both continuous audit facilities work the same way. Let's start the demonstration. We're launching Dynamics GP version 10.0. In this demonstration, we will log into a fictitious company named Fabricam Inc. and post a vendor's invoice into the ERP system. This will be accomplished by first posting the invoice to the vendor's account in the accounts payable module. Then posting the resulting payables batch named PMTRX into the general ledger. The invoice is from the vendor Mountain Wolf Auto Repair in the amount of $325. Note that the continuous audit facility is triggered when batch PMTRX is posted. At this point, let's take a look at one of the posting reports generated in the accounts payable module to see if there are any problems with this transaction. So in effect, we are going to see if we can identify the problem before the continuous audit facility can get to it. At first glance, everything looks okay. But let's examine the posting report a little closer. One problem is the posting date of April 12, 2017. This is a problem because today's date, the date of this demonstration, is July 18th, 2009. This is one of the leading causes of subledgers such as accounts payable being out of balance with their respective control accounts in the general ledger. And there is another problem. The amount of the vendor's invoice is being posted to a sales account in the general ledger, not the accounts payable control account in the general ledger. This is a problem because, once again, the accounts payable subledger balance will not equal the accounts payable control accounts balance in the general ledger. It is also a problem because this particular sales account in the general ledger will be overstated. One final point. The auditor might follow up on this transaction to determine if there is any evidence of fraud or malfeasance. However, for our purposes, let's continue with the demonstration by posting the batch created in the accounts payable module into the general ledger. As stated earlier, the name of the batch file is PMTRX. Now at this point, the continuous audit facility is evaluating the transaction. This happens behind the scenes. We see that the batch is posted successfully as expected. And we also see that the problems we identified earlier are also reflected in the batch report resulting from the payables transaction being posted into the general ledger. Now, let's see if the continuous audit facility did its job. Well, we see that we have an alert from the continuous audit facility regarding our fictitious company, Fabricam Inc. Let's open the email. Let's take a few moments to peruse the email. The first paragraph in the email states that we are the authorized recipients of the email and that this report is the result of applying agreed upon procedures to certain transactions affecting the general ledger of Fabricam Inc. The next paragraph identifies the user that posted the transaction in question and the date and time the posting occurred. The user's network sign-on ID and the user's ERP application sign-on ID are reported. The next paragraph identifies the transaction that triggered the alert. In our demonstration, the transaction is PMTRX31, and it is posted to the general ledger as journal entry number 3579. This information is followed by a presentation of the journal entry and any problematic data elements highlighted in red. In this demonstration, the transaction date and one of the general ledger accounts affected by the posting are highlighted.